Good morning and welcome everyone. This is the Euro Trade. I'm your host Marcus Stalker D. I've been trading for 18 years and 13 years out of that I've been trading for various prop firms. I am Series 3 qualified, but I'm not a CTA. Therefore, everything you hear and see here is for educational purposes only. Bruno has already posted the risk disclosure in the chat, so please have a read and familiarize yourself with that document. All right, so this morning I am working on some bots and it's time to test them properly. So just sorting out a few things here, so we'll need to re-log in. And then we're going to have a look at what's going on with the metals. Gold is attempting to go higher. However, at the moment, I'm seeing that it's having a little bit of a slowdown around the London average session range high, even though it's attempted to break out of the Asia range. So before I reinitialize the bot, even though I think copper is probably the one that's going to be more conducive for one of the bots. Let me expand gold. So Asia high, currently sitting at 3904.1. As always, I'm first doing the levels to obviously see where we are, rather than just sitting down and going, it's breaking out, I must get in. And the Asia low was created around Eurex Open. So current Asia low, 3880.3. Pretty small Asia range. Pretty small Asia range. Yeah, silver, we're going to have a look at silver as well. I don't have a bot for silver though. So gold COMEX value high at 3882.6. COMEX value low 3856. Next up, quantitative extremes. ADR high sitting at 39.297. ADR low, can't even see it. Where is it? Hold on a minute. Oh, I see it. Okay. ADR low all the way down at 38.735. When it comes to options levels, we did have a gamma wall at 3900. That has been the case for a while now, and today that's acting more as an accelerator. So I just wonder whether we're in a negative gamma environment. So let me just do this, and then we can cross-check that. Right, but before I do that, let's do the levels on copper and maybe on silver as well. So first things first, go to the 30-minute chart because we don't want to be messing around on tiny time frames when we're looking at structures. So Asia high currently sitting at 488.80. So we haven't really tagged that yet. And then Asia low, 82.55. COMEX value high, sitting at 86.20. Do I have that? Yes. COMEX low, value low, 83.15. Okay. This was yesterday. Don't need that. Or the other day. Average ranges, so quantitative extremes, ADR high sitting at 92.05. And ADR low at 79.25. At the moment, GEX2 was located at 488 on copper, and that halted the attempt of a liquidity grab above that. Now, what I typically look at this early in the morning is for that liquidity grab to happen first and foremost, and then to try and go reverse from that. Just Love is saying, this morning I funded a 25K account. I find trading futures better than CFD. It's less demanding and more dynamic. So let's talk about CFDs for a minute before we do anything else. So CFDs, to me, are only partially regulated products because they have these weird spreads that brokers themselves can actually put on however they want in the CFD market. Now, that's not the case with futures. Futures are heavily dictated by the exchange, the CME exchange. It's a centralized market, and in that respect, a lot more stable and a lot more, like, I wouldn't say safer, because nothing in trading is safe, but because of the specs that are across the board, everybody has to follow them. They can't just make up their own spreads. So the spreads are given by the exchange depending on whatever the best bid and ask is. So to me, I've actually moved away from CFDs many, many years ago. I think the last time I traded a CFD account was maybe 2016, 2017. And even that was mainly because I was still dabbling with like Forex. However, since 2013, I moved away from CFDs, and I haven't really looked back. One of the major reasons for that is that the spreads are absolutely horrendous in the CFDs. So, yeah, I mean, for me, futures are just much safer. And at the end of the day, CFDs are sort of a derivative over derivative, and that's never really a good thing. So, yeah. All right. Let's do the same analysis for silver now. Need to find a place in all of these levels here. So 30-minute charts. Let's recycle this one. High, Asia high on silver. 47,820. Volume is trying to grow in silver, but we'll see how they behave around the Asia high. Now Asia low, 46,845. Okay. Next up, we're going to have a look at the value areas in silver. Also using COMEX for that purpose. Just understand where the prices are rotating to and from. COMEX value high at 46,805. So just underneath Asia low. And in a perfect world, a great setup here would be if the price goes all the way down, then wicks into and below Asia low into COMEX value high, and then reverses. So we got to stay very patient if we're going to wait for a star setup. 46,356 is the COMEX value low. 356, 355. Let's do it. Quantitative extremes. ADR high sitting at 47,948. Let's say 945. That's good enough, because my other platform does everything in super high exact text. So ADR high, and let's make that into a yellow thing. I need a dash line to delineate the rest of the levels. Okay, and the ADR low is sitting at 46,730. And similarly, because we have a cluster of interesting levels down at this entire zone, that would become my area of interest for ideal pullback longs. So we'll see what silver was to do. For now, it's just reaching the supply, and it looks weaker than gold at the moment. And maybe we can look at the energies markets. Yesterday in the evening, I did a very good RBOB short from ADR high and value low test from the bottom. Kind of saved my day, actually. Not kind of, it did save my day. Because gold, I really expected to see a continuation yesterday, and that just didn't happen. And it eventually did pull up to one of the other zones that I was looking at, but I was just like, yeah, I think I'm done on gold today. So I have a bit of a love-hate relationship with gold when it's misbehaving. Of course, we have the NFP week, so that can put a bit of a wrench in the works. But yeah, so we have silver levels here as well. And let's have a look at energies markets. Just looking at how gold is progressing here on the volume. I don't know, it's a bit I know it's gone up, but it's looking a bit sideways now. It's not advancing above the SMA line for the volume bars. It's gonna hold, it held above it, but it's just seem to be losing a bit of steam there, which is kind of typical for this time of day. We only have a few days where gold actually goes crazy. So we'll see whether we get the snooze fest day that we normally get at this time of the morning. We have dude saying, what do you think about the current US situation? So it's a pretty broad question. I'm an intraday trader. I'm not really here to, I'm not a politician. So if me banging my head about, hey, what do you think about the current US situation or the current UK situation? That's not my job, right? My job is to look at the market, maybe use about 30% of macro analysis on days when that should matter, usually around FOMC releases, when there's something going on with the policy and, any sort of speeches. But outside of that, as intraday traders trying to keep track of the overall macro on a day-to-day, hour by hour, like, let's face it, most of you, like the way I trade, maybe there's a little bit more sense at doing that. But the way I trade is like holding trades for 2 to 4 hours, when I can. But most of you will be holding trades for what, like 2 minutes, 5 minutes? And, looking at some of the stats, some people hold trades for like 10 to 15 seconds. Do you really care, like, what's going on in the US economy? If you're going to be doing that. So I think it's a very broad question that doesn't really serve much purpose to intraday traders. And similarly, we have market makers that will hedge any sort of sell-off in a rally because that's their job. Do they care to bring the product to a particularly new level? No. They just want to remain neutral, market neutral. So again, don't think that's the right question to ask. But the right question to ask is, once we get to certain inflection points, like the Asia range, for example, or the value areas, which are distribution curves from the previous day, the question to ask is, do we have an exhaustion volume, or did the volume grow in the run up to it? I think that's more useful. Like, I never really had any use. And, I understand the macro side pretty well. I've never found that to be a defining factor in how my day is going to go. So yeah, instead of trying to play politician, let's just focus on what we know and stay in our lane. What is the crime is saying, CL is on its 6th straight day of losses in open interest. Yeah, and yet it keeps falling. So is it because we are coming away from the weekly range? Yeah, probably. Losing open interest and falling prices, they are effectively converging, right? It's conducive to the direction of whatever the energies are doing. So let's have a look at CL and RBOB. Maybe we can have a look at heating oil too. So yeah, let's start with crude oil and a huge weekly time frame, bird's eye view. So very rangy on the weekly chart. And I had this larger weekly range where the prices kept trying to get up to, slightly wicking over them. And I mean, slightly in weekly terms is a lot it takes. However, still, it's contained in a range, right? As it's approaching the bottom of the current range around 60.80, that's actually the more localized range. We have another one, if we scale out, there's another one slightly lower down. So if you see where the market was kind of pivoting around, that's actually down at 54.70. And if I analyze the supply and demand in a technical way, not the actual physical one, but technical supply and demand, I also see that there are demands sitting around that area too. So do we have space to go down? Yeah. Do we get stuck in a range in the summer? Yeah. Is that normal? Yeah. But as we get into colder weather, eventually we want to see whether there might be some demand increase. If there isn't, we're either having a warmer winter or they're trying to keep crude oil prices contained. Who's they? The wizards. There are certain players that have kept crude oil pretty boring and very range bound. Crude oil has had a personality transplant in the last couple of years, where it used to move about 300 ticks per day every single day, sometimes 600 and 700 ticks. Now we are lucky if we get 88 to 100 ticks. So basically about $1 a day. That's the range that you can expect. I don't see that changing, and this is the reason why I only use crude oil as a sort of a benchmark for the levels. But anytime I want to express my position in the energies markets, I will use the derivatives of crude oil, which is RBOB and heating oil. I traded crude oil almost exclusively for many years, but when you're working at an energies desk for a prop firm, like back in the olden days, you will inevitably look at RBOB and heating oil as well as natural gas. But natural gas is a commodity in its own right. So now that we have crude oil range in that massive time frame, let's have a look at how RBOB looks. Same thing, weekly time frame first and foremost. Very similar situation, but a little bit more spiky, right? So it tends to maybe trend a little bit better at certain times of the year than crude oil. But it also consolidated right underneath the last pivotal point from a similar range. I actually see RBOB having more space to the downside because crude oil is coming into a very well-defined weekly range. This one, I would say this is a distribution, sideways movement. And yeah, if I was going to short something at some point, it will probably be RBOB over crude oil. I'm almost permanently bearish on energies, so just like people who are permanently bullish on equities, I'm the same way, just to the opposite side in energy. So anytime there's a long, I'm like, probably stay out of that. But if there's a short, I'm like, yes, we've come up high enough. Let's short this thing. So again, I'm very selective about the setups there. And I would say I definitely don't trade RBOB every single day. I will put in like 1 trade a week in RBOB. And most of the time it works. So it's actually one of the more favorite products that I trade. Now, when you see me doing all this analysis on several instruments, that doesn't mean that I will look at all of them intraday. It certainly doesn't mean that I will be hopping from one chart to the next, to the next, to the next. And that's not the name of the game here. I will use the longer time frame analysis, the higher time frames, to figure out if there is an opportunity there that looks better than some of the other products. And then I will pick about 2 or 3 products to focus on in that week. Very different than having like 6 products and then going, I'm going to trade YM, then I'm going to move on to gold, then I'm going to move on to RBOB, then I'm going to... So, you know, if we maybe have some good liquidity happening, you could argue that there are certain parts of the day that are more conducive to trading certain products. And if that is the case, Like, for example, during tariffs, I was doing DAX in the morning. Then I was trading energies from about 11:30 midday my time. I'm in England. And then I would focus either on energies or yet another metal. And then if I really wanted to keep trading, I would look at power hour and one of the equities. But yeah, right now, I don't think there's that much movement to be had. And I find that even when I'm in pretty decent trades, the targets are just taking quite a bit of time to get there. And that means the volatility across the board is just not what it was during the tariffs, which is normal because tariff wars were kind of a form of a black swan event. Certainly caused a lot of volatility. So yeah, right now I'm just still in waiting mode, and let me just see if I can reinitialize the bot. But I want to add something though, so just want to cross-check something. Let's have a look at in the chat. Oh, we've got a Wes. Haven't seen you in a while. Hello. Mr. Open Iron says, let's go gold. Yeah, be a bit careful of let's go gold because on most days, gold consolidates. Yesterday was an outlier day where everything just kind of rolled over. But yeah, usually we get a bit of a agreement in price and it just stays pretty silent. And if we look at what gold is doing with the volume part of things, volume side of things, so, and again, I don't use volume too much. Now, is the volume growing? No. So on a 5-minute chart, it's fallen below the average, and it's just, that's not what you want to see for a continuation trade. You want to see this. But for this time of day, I would actually make an educated guess that we're going to get stuck in the same range that we see nearly every single day at this time of the day. So, yeah. Okay, I just realized something with one of my bots here, but I'm gonna have to do that later on, not now. Bitcoin ripping. I don't really look at Bitcoin, don't care. Is NFP still on due to the US shutdown? Well, until they actually shut it down, was it 2 hours ago? Let's see. Yeah, so it looks like they did do that. So let me maybe check the calendar now, because that might be updated. And then no NFP, in which case we don't have an outlier. Yeah, so NFP is off the table for this week. All right, well, at least that makes it a little bit easier. We don't have to do NFP Fridays, and there's nothing to tremble about. Just reading the chat. Noah from IT says, I know I'm up way too late when I see Deeyana live. Yeah. Well, hopefully at some point. We're moving this a little bit later. Khadia says, do you put your levels on HG and trade MHG? Yeah. So I put my levels on. So on Topstep I use it more as an execution platform. I don't do my main analysis. I just drag out some of the levels that I think I want to keep an eye on in order to position myself. But for any sort of analysis, I will always, always, always use the main contract. And then if I want to enter something, if there's a micro in that contract, I will trade the micro instead. But the analysis is on the main contract always, because that's where the big boys are. That's where you want to look at open interest. That's where you want to look at gamma levels. That's where you want to analyze volume from if you do more heavier volume analysis. And again, I always say I don't use volume much. I just kind of use it as a supportive factor. If I already have a level and an idea of what we should see around there, I will then just use that to position myself. And then just do the best that I can to try and manage that. So if I'm wrong, if I'm right, nobody knows. Yeah, let's have a look at natural gas, because natural gas can be an interesting one. That's an old level. Now, when it comes to natural gas energies in general, they don't have the same behavior as gold and the rest of the metals. Why? Because Asia kind of tends to be quiet for natural gas on most days. So let's expand this chart. And if I look at how Asia market behaved, this is a 30-minute time frame. Watching paint dry, watching paint dry, watching paint dry, watching paint dry. Oh, we've got pre-market for London, so a little bit of a movement. Watching paint dry, watching paint dry, watching paint dry. So not really the product to go, yeah, let's find Asia high and low and play, you know, the fake breakout, because you're going to be like, how many ticks can you possibly get out of this range on a rotation through it? Like 5 ticks. And as a comparison, I usually like to take between 50 and 70 ticks in natural gas. If we're in the time of the year where there's a lot of demand for natural gas, then that number can even get up to like 150 ticks. So 5 ticks for an Asia play versus NYMEX. So I know where I'm going to be looking if I want to trade natural gas. So yeah, with natural gas, I almost exclusively look at value areas, quantitative extremes, GAX levels, and time of day. Asia, high, low are completely irrelevant for me in the energies. Completely irrelevant. Sometimes if London makes a committed movement during the pre-market session, maybe we can use that. But we need a range. We need a decent range. And if there's no decent range, it means that the previous session high and low are not going to be useful at all. So you need to have a pretty robust way of looking at things in energies. Anytime I talk to core equities traders, they're like, how can you trade energies? But I've always loved them. I don't know. I think it's the double-sided nature where even if you miss a move, or let's say you misread the first move, it always provides you with yet another opportunity, and at least like 3 or 4 opportunities in a day. And I think that double-sided nature of the energies markets is what's kept me as a core energies trader. But then when I started working with Hogue back in 2015, when I became the first female funded trader at Topstep, yes, it was 10 years ago, so it was a while ago, he got me looking at gold. So I was like, I like gold. Gold. And then I started looking at other markets as well in that particular sector, should we call it. So yeah, metals, precious metals, and quite like copper at certain times of the year. Platinum could be great, but you know, with metals, apart from gold, the rest of them definitely suffer from seasonality dryness. So you get like a lot of times in the year where it's just not, it doesn't move. So you really have to pay attention to a few things. All right, let's have a look at the natural gas value areas. So 3326 is the NYMEX 3326. NYMEX value high. Currently sitting above it. Is it time to maybe buy natural gas on a pullback? It could be. NYMEX value low 3,296. Average ranges all the way up at 3,435. So same, very similar, not same, but very similar analysis. And then ADR low down at 3,275. And now we look at GEX levels. But before I do that, I am going to have a look at what sort of an environment we are in. So far, we are in negative gamma environments, which means that if we're running into GEX levels, it could be that they might act as accelerators. Now, I can see that we've kind of climbed over that gamma flip area where it flips from one to another. So there is a chance that intraday flows are going to flip to positive gamma at some point, because that is a living, breathing organism that can change intraday quite significantly. So I'm going to assume that as the day goes on and we are still above 330, so we're still above the value area, I'm going to assume that we are flipping into a positive gamma. So a very good area to look out for would be the edge of the value high, outer edge, so on a back test. But maybe, just maybe, there could be some scope for mean reversion if we don't move away too far up from this area, because where we are at the moment, this is opening within about 1.25% on the day, and for natural gas it's actually in range for mean reversion. So maybe mean reversion down to value. Look at how the value high is behaving, maybe a bounce from that. But obviously it depends where we are when we get to NYMEX. That's quite far for this time of the day. And this is all just very, very speculative, because I don't know where it's going to be. We could have a complete reversion ahead of NYMEX, and then we open inside value. That changes things quite drastically, because in that case, I'll be looking at a more of a range-bound day. But let's have a quick gander at the daily chart. And you will see that we are creeping up to a former supply area that was reactive. So this was the supply that it created. There was actually another one higher up. So I suppose this could be an offspring supply. So we already have unclean areas that were tested, they were touched before. So I'm not too keen on doing yet another short as a swing. And what I mean by that, sometimes you can have a scalp off of these previously tested supplies if everything else permits intraday. But the way this is looking to me is like we've tested this many times already, right? So this was one test. We tried to move away from it, and now we're right back at the same supply. So I would really like to see a test of value and then a further move up at the very least towards this ADR high, maybe even higher throughout the rest of the week. So with the strong push that we're seeing on the daily, it's building momentum from the lower down, right? So it's building momentum all the way from the candle that was created on 23rd of September, started the day off at around 3086. And then since then, if you look at how the volume has grown, it's increased in volume. So, coupled with the fact that we have previously tested supplies, I don't think they are going to hold for too much longer. Is it going to be today? Is it going to be tomorrow? I don't know. I have the same information as you, so I can just tell you in probabilities that once we've tested a supply several times, usually after the second test, the next test tends to be a breakout through that area. And then if I put in the time of the year, we're coming into October, things start to get colder, natural demand increases for natural gas, natural demand for natural gas. And all of that can fuel a recovery for the winter months. So yeah, if we go back through time, we can see that something similar happened towards the November time. So we had a temporary reversal, then made a new low. So this was all last year. But that was it for the year, right? So November the 4th created the low. Then we created a consolidation, so a new demand in creation, jumped away from it, retested the conterminous line, which is the market point shift. Because if you think about it, if the market is going to reverse, at one point you have at least 2 candles, sometimes 3 and 4, that are agreeing in price. So at one point there's an equilibrium there. And when we reverse, that equilibrium breaks to the other side. But the point of the equilibrium remains very important in general. And I use those areas, I call them conterminous lines, common price point, to see how the price is reacting. The best, strongest areas in that regard are the ones that just touch into a conterminous line and then immediately do a wick and bounce away from it. And you can kind of see that happening here. So if I were to draw, let me just make sure I'm not blocking that with my mug. No, okay, that's good. So that's exactly what you're seeing here. So we create that equilibrium break to the upside, then consolidate, but it remains there because that was the first point where we actually changed the potential market sentiment. And then sometime later, the price dips into it and just skyrockets from there. And that was it. So November the 4th. So maybe we have another month before we get into another leg up. And then how long did that last? And this was way before tariffs. This is all December now. Then we go January. A little bit of a squiggle halfway through January. Then that continues all throughout the cold weather, right? Cold weather, cold weather. Then we get to March. What happens in March? Spring. Okay. Everything starts getting colder. And look at this. It's like car crash. Whoa, car crash. And it just carried on falling and falling and falling. And now, as if by magic, we're coming into the colder times of the month. And we're starting to see some indecision, right? So to me, that's just definitely seasonal, right? And that kind of analysis is pretty useful on energies markets, just to know the seasonality of the actual product. And, I know the energies to the core, so I don't think it's the time in general to trade them every single day, but it's certainly something to put into your weekly plans at the very least. These seasonal patterns that we see over and over. But yeah, so when it comes to GEX levels, let's just have a look at important areas. GEX2 is actually all the way down at 320. GEX2 tends to be a stabilizer, especially if we are going to end up in positive gamma environment. And that is not too far from this ADR low, so that would have been a huge reversal. Now that's actually pretty far down. Yeah, 320. What was I thinking? I was thinking 325, I think. Yeah. But 320 all the way down. I'm not sure that that's on the cards today. So let's see what's higher up. Because it's outside of the daily range, so we would need to have an outlier day in order for that to happen. Do we have anything today? It's Wednesday. We have the inventories for crude oil, but the inventories for natural gas are tomorrow. So maybe Friday. Maybe Friday we get to 320 if we're going to have a reversal. But again, I'm thinking that this is the beginning, the slow making of a reversal for the winter time. So GEX2, GEX3. GEX3 is at 335. That is higher up than my value high. And then as an alternative, we do have the HVL, which is the gamma flip area. So it goes from negative to positive gamma or positive to negative gamma at 330. So maybe that could mean a rotation through the value, and then maybe they smash into that. I don't really have anything else in between those two levels. So GEX3, HVL, and then we GEX2. What I like about this is that the distance between the GEX levels are actually pretty significant. Now let's see what we have to the upside, because that's important as well. So we have GEX1 at 340, and we have a gamma wall up at 345. That would be conducive to longs into the ADR high. And let's pop those onto the chart actually, because that's pretty interesting. We want to be able to visualize all of that. So GEX1. So you will see the distance. What I don't like to see is whenever we have GEX levels that are really close together. So you're like GEX1, GEX5. It's like all within like 5-10 ticks of each other, and I'm like, it makes it very difficult to read. And then I'm like, well, is this one doing something? And then are we going to run into the other one? And it just calls for choppy price action immediately. Like I don't even have to see where the value areas are. I know that we're in for a horrible day where there's not much commitment to either side. What I'm going to do here, I'm going to say that this is also an HVL because I don't want to add another line. It's so close to it that it doesn't really matter. And then again, GEX2 all the way down. So if we end up maybe in some sort of a short for whatever reason, you know, we do have quite a lot of space. And then finally, we're going to end here with the gamma wall. So now these are just like orientation points. They don't necessarily have to be, oh yeah, we get to GEX3, we go long, because I would still want to see the test of the value high before anything. One thing that might happen is that as we maybe reverse a little bit for a bit of a pullback pre-market, maybe GEX3 and VWAP might start to overlap. And then if the price is below those two, maybe I can run a trade that will hit the GEX3, then go all the way to value, then see whether we're maybe rotating through value, and then quite possibly hitting the value acceptance to the downside. Now, this is against the idea that we're going to go into a new trend. But since we are at a supply, there is a chance. It's also the first of the month, so we need to really be careful how we position ourselves, because the first of the month and the last of the month can be either unwinding of positions. We saw that in gold pre-market, and this is one of the reasons why I was expecting it to keep going, because it was like the last day of the month. But it didn't. It just reversed and just screamed to the upside again. But yeah, natural gas energies, they can definitely suffer from that positioning type moves, either unwinding or new positions arriving. And maybe this is where you look at open interest. So someone was saying about the open interest falling for like 6 days in crude oil. Well, see what happens today, because usually if somebody is going to position themselves with crude oil, they will do so. Commercial hedges will be doing so at the beginning of the month. So again, another use for open interest, right? But yeah, the most ideal setup here for me would be touch of the value high, reversal, and then we go into GEX1, maybe make a little bit of a wobble into the euro close, and then continue eventually to ADR high. That's like my primary thing. But I don't want to be biased, because this isn't an energies market. It can go anywhere. Another question: are your value high, value low TPO based off the day before? Is the day before regular trading hours? So NYMEX hours are typically from, I don't know what time of the what time zone you're located in. So I'm just going to talk in Central Time, because I think everybody can relate to that. I can mention the UK time because that's easy for me. But yeah, so it's 8 a.m. Central, and then crude oil finishes at 1:30 p.m. Those were the old regular trading hours, the old pit hours. They have carried over into electronic trading. One thing that I do across the board is to extend the time for the TPOs, because sometimes you can still have some movement there. But if you want to be like purist, then for NYMEX times, you will want to only do your TPO profile from the previous day, not the current day. We're looking at done and dusted sort of development here. You want to do it from 8 a.m. till 1:30 p.m. Central. That's the regular trading hours. And that's where I get my value high, value low from. Now, depending on the platform that you use, they will be different. Some platforms use the wrong calculation. I have my own indicator. I have a software development company, and we have thousands of users at this point. And yeah, we're actually working on creating a utility Discord. So it's not going to be a Discord where you come in and you discuss things, because that's like so cancerous to me. So my training side on my coaching side that I do through Market Stalkers, that is remaining in the same format. There will be no mixing and matching of those, but there has been a need for people to access our levels, because they are really good levels, and they are great as orientation points. They're great for creating systematic playbooks and being less discretionary overall when it comes to your analysis. But we only have that for one platform. We are still working on it, but it's taken us so much longer than we anticipated. So what we're trying to do is to bring our Blatic levels to the general public somehow without waiting for like another year for us to translate everything into other trading platforms. So one workaround is to just publish the levels in a utility Discord. So I'm working on that right now. My team has already created the way to drag out the values. So it should be done. I just need to sit down and actually finish it up, because I've been working on that all last week as well. So I've been a busy bee over here, busy D. Busy bee, busy D. And yeah, so at some point, I think in the next week or two, I'm actually going to visit my mom. It's her birthday, so I'm going to be away. I'm still going to do the streams. You're not getting rid of me that easily. But yeah, I'm going to be in Serbia, so I won't be able to trade my live account over there, because it's actually Serbia is not a regulated country. We're like I mean, we're doing okay, but when it comes to certain trade policies and stuff, we're still very much almost a third world country. Not quite, because we're in technically in geographically in Europe, but everything else that's happening over there is still very tricky. And I can see why it's not approved. Like, I wouldn't put my money there. Let's put it that way. But yeah, it is where I come from, and it's my mom's birthday, so I'm gonna have to pause my live account trading for the week. I'm coming back on Friday, so I should be all back in this office again on the next week. But yeah, that's something to consider if you're looking for my levels. Now, Mentor Q has their own thing, right? So obviously the GEX levels are from Mentor Q, but if you're looking for Blotix specific ADRs, value high, value low, the ability to have a look at the different value areas for different sessions, which not many platforms have, that is coming. And just to give you an overview of how easy it is for us to look at different levels. Here is the COMEX value for gold. Click of a button, Asia levels. Value high, value low. London levels. So click of a button, it just does it. So what we're doing is to try and just do 3 sessions and then have values for those sessions, and to have ADR and ASR levels. Now, ASR is my sort of workaround on the regular trading, regular hours versus the overnight session. So, you know, the overnight session obviously has its own range, and sometimes it's not all of the ADR, right? It's a portion of it. So what I've done, especially on days when the market would just go absolutely crazy, that's another use for it, is to have the ASR, average session range, as an additional measure when the next session begins. So that way, no matter how much we exceeded and exhausted the overall 24-hour range, I have a new reference. So now, even if I want to run a continuation trade, I have a reference of how much space I actually have for this brand new thing that's happening. So, all right, so everything is gone a little bit quiet now here. Let's have an overview. So those are my natural gas levels. Let's go back to RBOB here. All right. Yeah, so copper, not really doing much here. Silver, also not close to Asia high. Copper is chopping inside the Asia range. Gold is kind of turned around a little bit. Speaking of average session range, there is an average session range high at 39.15. But yeah, we've extended into a normal day type now. Why do I say that? What is a normal day type, D? It is when the first hour of trading, which is here, extends by around 1 time the size of initial balance, and we're pretty close to that. On gold, a lot of the times in last week, and actually previous 2-3 weeks, the day types that we've had were either normal or normal variation. So that's maybe a stat that you can use. So if we say that this is a true reversal, maybe a retest of these are the old levels. I'm just gonna not get confused about that. So maybe a retest of the Asia high and initial balance high. So that's the first hour of trading, IB, initial balance. And maybe once we get closer to LME, we can have a pullback a little bit into the initial balance. I would even consider a pullback to VWAP, which at the moment is sitting at 3,900, where we also have the former core resistance and a gamma wall. So maybe bounce from VWAP at 3,900 for a further move up. So that's where this would be. But yeah, I'm not shorting this today. It's so resilient. It almost reminds me of equities. It's so bizarre to see gold doing this. It used to be a lot less directional. It used to be like wiki, kind of like more like an energy market. And then for some reason, after COVID, it just started going into this crazy directional market. And I think I know why, actually. We used to have a negative correlation between equities and gold, and that used to be the old portfolio management, where protection from inflation, protection from geopolitical events, and then they would buy gold as well as buy equities, and that would be in its own hedge. But then COVID came, and suddenly equities and gold started correlating positively. So now the only time I see negative correlation between those two asset classes is when we have like risk on, risk off. So some sort of a war or conflict or monetary policy. So they still go the opposite way when Powell is talking. So during FOMC, on all other days, nearly all other days, they are positively correlated. So that's going to put a wrench in the works in those old portfolio theory people. But yeah, so maybe a pullback down to 3,900, and then we can run a gold long. Don't have anything on copper. Copper Asia range is very small. Maybe if we creep up above the Asia range and we actually stay there with some volume, maybe there's some value in longs. But at the same time, you know, I can do the same argument for the short there. So I'm just gonna wait. Every time I'm going, oh, go long or short. Yeah, that's true. But I would prefer to just wait and see what the market is gonna do before I position myself. Copper, again, struggling around the GEX1 area. And the ADR high, let's have a look at that. ADR high is higher up, but we also have the implied volatility area, which is kind of similar. Let's see what they do around VWAP. But I do think that silver might be a little bit too big for most people to trade, even on a micro. Let me just have a look. So, I don't remember what micro silver. Yeah, ouch. That's very, very high. It's like, this is why I don't really look at micro silver that much, because it's so expensive. Christ. Like one micro silver is still like $10. That's very expensive for a micro contract. But again, full silver is very expensive as well, right? Full silver used to be like 50? I think it's 25 now, isn't it? It's like Nikkei territory. Terrible. Yeah, so Stumbling Wanderer says, Gold gave me a nice quick short from 39.19 to 39.15. So to me, that's taken, so I don't do that, right? And the reason why is because for many years, I was taking, 35 ticks here and there. And then I got old and I just couldn't be bothered with getting my mental capital invested in something that's going to bring me less than about 50, 70, 100, 200 ticks. So over time, I stopped trying to look for small moves. I have no desire whatsoever to capture tiny little movements and then stroke my ego that I've done so well. So I don't do that. To me, when a product moves on average 500 ticks a day, me taking 40 ticks is such a tiny amount. It's like, tiny. So I actually want to take 30% of the day's move, and that's scalable. So for me, gold, capturing 30, 40 ticks, it's very risky because it's very whippy and almost always leads to negative risk reward if you keep doing that over and over, which is not bad in and of itself, but we've seen over and over that the most stable systems, especially those traded by humans, are not the ones where you're scalping for a few ticks. You can still scalp, but just make sure that you scalp a bigger chunk of the move if you can. I don't see why anyone would scalp a trending market, because if the market is going to give you 200 ticks, why do you want to take 10, 20, or 30? That never made sense to me. But yeah, I did try to scalp at one point very early on in my career when I got through an apprenticeship, and they were sort of they were a market making firm. So they were trying to teach us to, have a certain volume on the day, and then they were like, well, there you go, you need to fill 3,000 contracts today. And I'm like, how do I do that? They're like, yeah, just do like, bid and ask. And I'm like, okay. So they literally wanted us to do so many trades in a day to generate liquidity and to try and make some money for yourself as well. Very difficult. And that just didn't speak to me because, it was very stressful, very stressful. So I found myself with like bloodshot eyes, and I don't think I would have stuck with trading for 18 years or intraday trading for 12, 13 years now if I had to do that. Certainly would look a little bit younger than my age. That's for sure. All right, let's see if there's anything else happening. So all right, so we have maybe copper creeping down to the low of the range. Let me see what I can do here. It's still silver. Need to select the chart. There we go. Yeah, so maybe copper creeping down to Asia low. See what happens there. If we get there, I don't know. But again, bigger moves usually start happening in metals closer to LME. And for now, I don't have the time change for the show just yet. Don't ask. Lenka says, could you show us some of your older trades and show us why did you enter and where was my take profit? Right, I can show you the RBOB trade I took yesterday. So there we go, RBOB, there we go. RBOB. So this one was a very straightforward one. The way things looked yesterday, we had the average range high. Style? Yeah. So average range high somewhere in the vicinity like that. We had the value area low from the bottom. literally at the same area. Maybe even slightly lower if I remember correctly. So that was NYMEX value low. And we got to the time of the day that I refer to as the day range fill, which is basically about 90 minutes to 2 hours into settlement, NYMEX settlement, the old regular trading hours. And kicked that off, was pretty confident about this is a star setup for me. That was the one that dragged my day out. And yeah, so I got all the way down to value low, sorry, to VWAP. There was a moving average at that point as well. I don't know whether this would be true, but I do remember that the VWAP was my target. So that is $93.28. And then down to 92.19. So ballpark about 108 ticks. 108 ticks. So that was one of them. Exhaustion of the ADR towards the end of the day, or the end of the session for this product. Hitting the value area low after a mean reversion, because we opened outside of it, then came upside, but I wasn't trading this. I was being tortured by gold at that point. And then all the way down to VWAP into the close. That was it. So yeah, this is what I mean being selective with the entries and everything. So that was one of them. It was a very straightforward trade, star setup, all of that, and it worked out. End of story. Gold, on the other hand, that was torturing me yesterday. So I tried 2 shorts, very small size, because I was expecting, so I can show you those as well, how wrong I was. But it was in a smaller size as well, so micro golds, yeah. Oh God, I need to go back to a 2 chart situation because I have multiple screens, so my charts are actually undocked everywhere. Let's just say that. Go back to executions, and I will tell you what I was looking at on gold and why I was thinking that. Here it is. Probably best to go down to a 5-minute chart because I was looking at a low time frame. Let's go back. Let's go back. Let's go back. Here we go. Being tortured by gold, right? So my first attempt was that we're going to test the value low, which was actually lower yesterday. So I tried a short, right? Didn't have a problem with that because I was like, okay, yeah. Touch value low, reversed. And interestingly enough, the value low is pretty similar. So yeah, it was pretty straightforward, right? 5-minute chart, reversal, let's try it. Smack. And then I was like, this is not doing what it needs to be doing. And we also had the jolts and the PMI as I was trying this. So sometime later, I was like, I'm going to size to, like, just to test the waters out to see what the hell's going on here. So I decided to cut it to like 1 micro just to feel things out. And again, I was like, let's see if I can maybe do a short again, because we had a range. If I go up to a 15-minute chart, there was a definite range. And then it just shot all the way up. And I was like, I'm done. I'm done with gold. It was my next area of interest was then all the way at 30. 38.75, between 38.75 and 38.85. And as you can see, it did reverse, but I just kind of lost patience with it at that point. I was like, I don't like gold today. And sometimes if I'm not liking or not reading something properly, I will completely move away from it. It doesn't matter whether the next trade and the next trade. It means that I've tried, 2 or 3 times and it just didn't work. It was completely against what I was trying. But it was on a very small size, so it was like 1 and 2 micros. And then I moved on to RBOB, waited for probably about 3 hours, and I managed to get the day back with a star setup, expected move, and 100 ticks in profit with very little drama. Anytime I started a drama with a trade, it's always like, oh, yeah, don't want drama. So yeah, those were a couple of trades. Rich is saying D, natural gas, RBOB, and CL have been down. You always say you're inherited short, but is there anything you look for when these 3 become bullish? Not really. Usually I stay out of the bulls unless it's colder weather and we have a war somewhere. That would be the only time that I might do a long. But even when I'm long, I'm not sure, like, it doesn't matter how high up it goes, I will always just kind of grab my 70 to 100 ticks and not ask for more. If I'm getting involved in RBOB earlier in the day, I will try to get at least 243 ticks, but for the end of the day type of trades, it's like 100 ticks is what you can expect. And usually for any sort of mean reversions of the sort that I just showed you, if VWAP is giving me 3R or 2.5R, I will take that. I won't try and push it because there's no time. You're going to run out of time, and then it's the end of the day. It's settlement in energies, and usually everything just dies a death most of the time. So yeah. Prime says, I think we blew straight past 1-day max and goal. Is that even sustainable? Well, we've been asking that question. Do you know what? Yesterday when I saw that reversal and when we didn't go into taking out the Asia low at COMEX beginning, I was like, this is bearish for me. Like we couldn't even, we just kind of, the volume was also like so terrible. And I'm like, what is, like, this is going to be one of those where it's a big extended, almost like a bear flag, right? And then we're going to just run through it. And the bastard just kept going up, up, and up. And I'm like, really? Do we care that much about jolts now? Like, it seems like they're kind of hanging on every... this is why I say it reminds me of equities. They're using any excuse to just buy up gold some more. And I'm like, it's the end of the day. You've just unwound positions. You're supposed to keep unwinding positions because that's the expected move, right? You unwind positions. But I don't know, maybe yesterday we had the US government shutdown. And was that yesterday? Was it 2 hours ago? I don't know. But maybe somebody heard that the NFP is not happening. So it's like, no, buy. Buy more gold. So maybe that was a factor. But it was an unusual day. A lot of the norms that we expect to be happening given the times of the day and stuff, it just didn't transpire. But yeah, luckily RBOB saved the day. And this is what I say, I said it so many times on my own streams when I was running it, even if the beginning of my day didn't go well, as long as I still had some juice in the tank when it comes to the loss limits that I assigned to myself, the end of day trades would save my day. So I could but this is partly because I don't do like a million trades. If I can't get in on like 2 or 3, and I don't know whether I can actually limit risk in light of whatever gold was doing yesterday, and I just couldn't do it. I was just like, how do you limit risk here? This is like enormous candles, like on a 30-minute chart, candles were like 120 ticks wide. And I was like, I'm not going to use a partial stop loss of like 60 ticks inside the candle just so I can capture a little bit of the move. And then I will be uncomfortable. You can't be that uncomfortable in a trade. Like trading is generally uncomfortable, but when I'm in a star setup, I get this how would I explain it? Solid feeling in my emotions. So I'm not afraid of it because I know the setup well. I know what I'm looking for. And there's just no fear. There's no hesitation. There's nothing. There's just like, I've seen this so many times before. And I don't care if this one doesn't work because I've seen it so many times before. And then when it does start doing what you expected it to and what you've seen play out and you lived through those so many times, there's still this solid feeling of, I can let this run to its intended target. There's no like, oh, should I take it off? Oh my God, should I take it? Like there's no, that sort of nervousness about the trade management. It's just like total zen. But when I'm seeing something that wasn't really in my plan and everything's going crazy, I'm just like, interesting. And maybe back in the day when I was a new intraday trader, maybe I would have been like, oh my God, it's moving. I have to get in on this. I'm just like, no, this ain't right. So that's, I don't know, maybe that's something that you develop over the years. But having said that, I am a little bit on the non-emotional side. I don't really cry unless it's like life or death or I lose a dog or something. So outside of that, it's very difficult to annoy me. It's very difficult to rile me up. The only time that I might be a little bit more irritable is if my health is not doing very well. And maybe I had but it takes so much for that to happen. You saw me a little bit irritable, I think, a few days ago. And that was after a migraine that lasted for 4 solid days. So after 4 days, I'm like, yeah, I don't have time for this today. And then somebody says something and it throws you off. But trading for me doesn't do that. I'm just like, okay, that's a little annoying, but I'm not going to cry over it. I'm just going to be like, okay. And then I either stay out or I just move on to another product. Do I use GEX levels for GC or only for energies? I use them for everything. Anything that has options in a meaningful way, I will use them. It is a part of my orientation sort of OODA loops, so to speak. But before I do GEX levels, so it's not like I just stare at GEX levels and I'm like, yeah, this is going to work. I do this sort of analysis first, right? So Asia high, Asia low for metals. Obviously, there's other things inside the TPO, right? So the TPO profile has the initial balance. It has the day type. It has, is it a neutral day? Is it opening inside or outside of value? Like all of these other sub-components that bring me situational awareness. And I know that some people who watch my streams, actually I was really amused one time when we had an ICT trader who came in and I only had like these sort of levels, right? That was it. And then they usually have FVGs and SMT and PD array and silver bullet and this. And then that person said, isn't that too many lines? And I was like, oh, and your lines are not that exhaustive at all. It's like, what are you on about? So I was having a bit of fun that day. But yeah, I think my way of looking at the market is actually pretty simplistic. If you break it down, there's only about 4 components there. 4 components, that's it. The rest of it is just time of day, when we're going to see this. And, I know a lot about trading and I've learned a lot because I'm nosy and I want to know everything. But over the years, I've just retained what I feel has the most value for me as an order flow trader. And, GEX levels and how price reacts around them. And also how that relates to the other bigger components like the Asia ranges, value areas, and quantitative extremes. To me, that's valuable. And to me, that brings me a pretty solid picture on most days. And then when the market starts coming outside of that framework, that's my cue to stay out. Because I'm like, well, yeah, I can see what's happening, but I have no way of actually entering a trade at a normal, non-risky way. So this is why I love the false breakouts so much. Because the false breakouts enable you such a small risk. They're probably the juiciest trades out of all of them, and failed auctions sort of fall into that same category, okay? When I have something like a failed auction long after a test of the Asia low and COMEX value high, that is a super high probability setup for me. Because not only do we have a wick below the Asia low, but we also tested the distribution curve. So again, if we can get down here and I see the exhaustion volume on a 5-minute chart on a main contract, followed by a return to the Asia low and a reclaim of value high, I'm jumping on that like tramp on a sandwich, right? But if I see gold doing this as we're approaching the value low, it's like it's not a value acceptance because we rotated through the entirety of the value. And then it wicks to my other area, because I was looking at a Q high from the 30-minute chart, as a potential short. But then it just smacked back down. But again, all these candles are so technically what I was looking at worked. It you know, the second area did work. But I was like, how do you position yourself for this? And I don't chase momentum. I don't. If momentum happens after I get in, great, I'll stay in on that. But if I'm not in by the time momentum is happening, I hate trading through that. Absolutely hate it. And then some people might be going, well, you could have gone long off VWAP. Yeah, but it already hit the other side of my plan. So the only plan that I had was a mean reversion from that Q point, from the top of the established swing, not all the way to the top. It's basically a quartile. So I look at the quartile. There was also an average session range high somewhere in here yesterday. So yeah, that might have worked. But again, I wasn't going to use a huge stop loss to try and get my stop at the good area and away from the round number. And then it just moved really quickly. So I was like, okay, whatever, man. Gold is just not my baby. And then I could have done this, but because it already tested the top part and we were running out of time at that point, how much could I have taken? Like maybe 30, 40 ticks. And again, I don't like doing that. I really don't. I do that on range days. You know, we'll absolutely take 30 ticks on a range day when we just don't have that much happening. But I'm not going to be doing, you know, huge stop, you know, to account for the market structure that we have at that point. And I don't like to place my stops on anything less than 15 minutes. So there's that. So yeah, I'm very selective. You know, I'm very selective. I want my low risk trades that then show up as momentum. So this is why I go for more like mean reversion type trades, and they're a lot more natural for me because they generally have a natural higher risk reward inside them. So you're not looking at, you know, just skimming a little bit. You know that there's space because the structure is weak. And I would argue that this Asia structure is actually pretty weak, which is why I would want to see, you know, see the pullback and then a continuation. But we do have this Asia high at VWAP, which might be a choice. However, it still depends how big the volatility is going to be around about that, the time that we actually test those levels. But yeah, me catching it, like buying the top, is that what we're doing here? That's not going to be me. Shorting the all-time high, that's also not going to be me. I've said that many times. Maybe if we prove that we've established some sort of a swing there and we're really struggling and we cannot take out, you know, the high, that's a different story. That's MGI, right? That's market generated information. Do I use composite profiles? No, I do not. I looked at them many years ago, but because I look at the larger time frames as supply and demand analysis, I think that offers me much more detail. Just like the TPO over volume profile offers more detail. But to me, supply and demand analysis of pure price action it will offer me, like anybody can see that composite profile was down, up, or neutral, right? So, and what's a composite profile? So composite profile is when you, it's not a very well-known thing. It's not talked about because it's not that useful. Let's say today we opened Asia somewhere here, and then we went up from there. So where was the open and how did the day close? Even a blind person can see that, right? And then if the open was in the middle, but then it went lower and then went higher, that's generally considered sort of neutral. But you effectively have buy or sell composite profiles. I stopped using them years ago. I just didn't. I didn't see a way that you could use that. Same thing as rotation factor. Just because you have more TPOs above the point of control, it doesn't mean that it's a bearish day. and I really tried to implement those, and I was never happy with the probabilities that those tools were giving me. So eventually I just decided to stop. All right, so we've come to the end of the stream now, and yeah, so we're probably going to be in this same watch paint dry. So you saw how it was yesterday. Well, here we are again. 2 hours of consolidation. So this is why I don't fancy trading metals for this time of the day. But yeah, well, let's see what happens with LME. Yes, I know that we said we're going to be changing the time, but there's something going on at the moment, and we are not able to change the time to the new time. So for now, Eurotrade stays as it is, unfortunately. I'll probably have more news in about 2 to 3 weeks. So yeah, there's you know, there's some additional complications that we didn't foresee. I don't know why, but it is what it is. So I'm going to wish you a very good trading day. Make sure to lock out your risk settings. Now, on the live accounts, we do have some of those, but you actually have a lot more choice. You have trade limit, number of trades limit per day. But you also, we also have the symbol blocks and the symbol contract limit. So whoever tells me next time, I sized up because I went on tilt, I'm just going to point it to that area where you can lock out the risk settings for the day and do the limits. Block the symbols for big contracts so you can never trade them whilst you're on tilt or in a drawdown or you're misbehaving. Once your brain realizes that shackles are there to protect you and that there is no other way to survive in this industry, you will be so much better off. So please use the risk settings and lock them out. Check everything. Make sure you're using about a 1/10 or, I don't know, maybe 500 per day at least, you know, if you're on a larger combine. And you know, right now I'm just using very small amounts, especially for the London session, but I'm not locking out the risk setting. But you know, if I were to remove this, you know, 4.5 grand of personal daily loss limit, I'm not going to be using that, right? I'm going to be using 350 for now, maybe expand it to about 500 or 600, and yeah, so just something to keep in mind. Don't allow yourself, at times when you're being irrational emotionally, to expect that you're going to be able to control yourself. Emotions mean fight or flight. It means no control. I'm going to leave you with that thought for the day. This was the Eurotrade. I'm Marcus Stalker D. Have a great day.